What's going on, everybody? Hopefully, you guys are doing well this morning. Let me go ahead and update this screen. I'm excited. Hopefully, you're happy to be here today. What a great time to have time to learn this skill, to look at what the markets are doing, and then to position yourself in a way that you're not just being reactive, but you can be proactive in the market. It's your first time watching. My name is Coach Brian King, founder of KDT Institute, stands for Kingdom Day Traders. Our mission is very specific: to reach 1 million people, teaching people the skills of day trading so that you can live life on purpose and build God's kingdom. We are unapologetic about faith. We're unapologetic about being excellent in what we do. What we're going to be doing today is looking at the markets. And there's been a little bit of a shift in the markets. As you know, this is April 2nd. A couple of days ago, there was optimism that we would be getting out of the Iran war and that we were going to be having a hard stop. And now that's changed a little bit because now we're saying it's going to be a couple of more weeks. So if you can, do me a favor, let me know where you're coming in from, and let's go ahead and get started. And here's my promise, right? I promise that if you stick with me, this is going to start to make sense. We're going to do something that seems to be a foreign concept for a lot of people and simplify it in a way. So do me a favor, drop a 7 in the chat if you're watching live. That way, if we have these recordings back, I can know that you were tracking with me. Now, with that being said, let's jump into the charts, and I'm going to start doing something called top-down analysis. Now, I'm doing some training today specifically for my scalpers. What is a scalper? A scalper is looking to get in and out of the market. Put a 7 if that might be you. Like, you don't want to be in the market all day long, but you would like the idea that if you could, in less than 2 hours a day, make a day's wage. And yes, I did say that correctly. We don't have to just be staring at the screen. We can find pockets where we can get in and out. So with that being said, let me go ahead and pull this up on the stage, make myself a little bit smaller on here. And the first thing that we want to read is, if you look at the VIX, it's above 25. What is the VIX? It measures fear in the market. So with the S&P 500, the other day when the market was shooting up, the VIX had actually dropped to 20. Now it's up 25. Oil up over $100 a barrel. Fear and greed is up as well. And all indices are below the 200-day moving average. And treasury yields have been elevated. So we're going to simplify all that stuff so that it starts to make sense. And the focus thing that we're going to focus on is we want to look at the market itself. And as we look at the market itself, let's do something called top-down analysis. Now, one of the things that I like to do for all new people is I like to simplify things. And so watch this. You could read reports. You can have the talking heads on Bloomberg. But let me tell you what moves the markets: institutions. So we're looking at the S&P 500 futures. This is a June contract, 4-hour time frame. And what I want to mark off is areas that have significant movement. So just track with me, please. Let me know if you see this. Who sees that big green candle? Just go ahead and let me know if that's you. And then I'm going to highlight this in yellow so that it starts to stick out. Now, here's one epiphany. The epiphany is institutions created that move. This wasn't just random. There was something about this area at the bottom that institutions said, I love this price. So that's the big takeaway. It's not retail traders we're fighting against. We're fighting against major institutions. Let's keep on tracking. So also, I'm going to come at the bottom right here. Let me know if you see this as well. How is it that it looked like the market was falling, and all of a sudden a U-turn happened? You know what we want to do? We want to mark off this area as well, because this is going to show us institutions like this price. Now, what's the big takeaway today, right? The big takeaway is that I need to learn where the institutions have value, and I need to trade with them versus against them. Does that make some sense right out here as well? We don't want to just be taking trades. We want to take trades at the right areas. Now, here's what starts to happen as well. You start to see some repeatable patterns that come in the market. I'm going to write out this letter. If you can in the chat, let me know what you see. And this happens day in, day out. You start to see W's and M's in the market. And so my job as a trader is to identify the pattern, but I need to identify the pattern at the right time. Does that make sense? So let's kind of bring this down so we can kind of have this idea. And current price, as we speak, is right here. Okay? Track with me. So this is the 4-hour time frame. Think of the 4-hour time frame as you're in an airplane and they say we just reached 35,000 feet, which is equivalent to about 6 miles high in the air. At that time, you don't see people walking. but you still can see the full view, the peripheral. But as we go down to 10,000 feet or 1,000 feet, we can see cars driving, people walking. We're getting a greater perspective. As we go down in time frames, we want to get more details. So I'm going to go from the 4 hour to the 1 hour just to get more details. And look what starts to happen. As I'm looking at this area, here's what's sticking out to me right here. You say, what in the world are you pointing at? Do me a favor. I want to show you a trick. So this is called a fair value gap. It's an area on the charts where there's an imbalance, and oftentimes price will jump in this area or be attracted to it, almost like a magnet, and it will come back down and then take it back up. Let's watch this. So if you see this 3 candle formation, we're going to count it. We've got 1, 2, and 3. Watch this. I'm going to mark it off from the bottom of that candle to here, and I'm going to put this in, let's do it in purple. As you can tell, I love purple. It's a royal color. And this is called a fair value gap. Now watch this. You see that 3 candle formation. Now I also have an indicator that marks it out for me as well. And what I like about this is that when I put this on my chart, I don't have to, I can look at these areas and say, you know what, let me not trade in that area, but let me trade with the area, if that makes some sense. So if you see what price is right now, it's in an area where it looks like it's going up, but this is a big rejection area. So instead of me saying, let me buy right now, I'm kind of holding off because it looks like it might want to sell. So look at this fair value gap, which is simply imbalance, and the imbalance is happening inside of the candle. Here's what I like to explain to people. If I owed you money, would you come and get it? Of course you would. So these institutions have times that price will take off. It'll go so quickly, but it leaves something called unfilled orders. It's an area of price where price moves so quickly, it'll shoot up or shoot down, and it'll come back in that area. And so what I'm doing right now is I'm looking for some confluence to see if it's making some sense. And I'm identifying areas that the institutions are buying and selling. Let's zoom in a little bit more. So we looked at the 4 hour, 1 hour. Let's go down to the 5 minutes. So this is the territory of scalpers, right? We're looking to scalp trade. And if you look at it, right, I want you to look to the far left over here. You guys see this? And there's a bunch of selling going on right around here. So watch this, right? I'm not going to force the trade. I'm going to allow the trade to come to me. Watch what I'm going to do. So do you see this area right around here? Let me kind of zoom in a little bit. And if you notice, I'm starting to have some fun. You know, it's funny, whenever I started to trade, I remember I started this in 2014. And for the longest, I had some of the most boring teachers ever. I don't know about you, but if somebody's going to be teaching me something, I just feel like they need to have some level of drive and be excited to teach. And here's my belief. I believe that this is the great equalizer. Like literally, you can learn these markets. I can show you how to do with the S&P 500, the NASDAQ. We can look at gold. We can look at crude oil. And we have multiple different ways that we can make some money. So watch what I'm going to do. I'm going to set up a limit order right around the 5 minute. And let me show you where this limit order is going to come from. So if you see this area right around here, right, I'm going to take out my fib tool. And it's going to create some numbers. You guys see that? So as it's created some numbers, I'm going to set up a limit order to get into this trade. And that way, I don't just have to stare at the screen. I just allow it to come to me. So in essence, what I want to see is I want to see price go up into this blue area where I can sell it down. Yep. And it's right in this area. And then I'm going to put a stop loss right above here. So watch this. This is called an institutional limit order. So seeing that I want to short my position, I do not have to stare at the screen. Instead, I can allow the market to come to me. And this is what I always like to tell people, trade the smart way. You know, you're going to be tempted to want to force a trade. And whenever you want to force a trade, you'll find this out, right? You will find out that if you try to force a trade very, very often, it's not going to work in your favor. Instead, we want to be a little bit different. So we're looking at ES. And so if you're looking at this, every time it moves 1 point, we get $50. Just do the math on this one. If we can catch a 10-point move, that is $500. 20-point move, $1,000. 30-point move, $1,500. Track with me. So I'm going to do something a little crazy. I'm going to do 2 contracts. I'm going to set up my risk to reward ratios. Okay. We're doing this off of a demo account. The demo account is sitting at 120,000. It started with 100. We're going to risk about 1% for that account. So guess what I'm going to do? I'm going to change it from 2 units to 1 unit. Okay. And what I want to set myself up on is a proper risk to reward ratio. So watch what happens. I put an institutional limit order. I don't know if you guys can see it. If I'm wrong, I lose $912.50. Everybody say boo-hoo. If I'm right, I make $28.62. So just think about it. I have it set that I don't have to just stare at the screen all day long. I can put myself in position to make some solid money. Now track with me a little bit. We're also going to be a little bit more precise. And what I mean by that is we're going to use a tool that allows us to see the average true range. So now that we're having the proper risk to reward ratios, track with me. So I'm going to go here and I'm going to put on something called the ATR stop buffer. And if you can see this top right out here, let me just kind of give the math and let me see if you can kind of get what I'm saying. So I said that we want to be able to trade this trade. And I told you every 10 points is $500 just on one contract. But the daily average for this equity, this indice, it moves on average of 130.25 points per day. And we're looking to grab 10 points. We're looking to grab 20 points. We're looking to grab 30 points. I want you to go ahead and talk to me right quick if you're tracking with me. Do you think it's possible that we could grab 30 points if it's moving at this level? Somebody talk to me, please. Because I think it's so important to understand that I have to trade the right vehicle if I'm going to be trading this. Does that make some sense? And then also, I want to say this as well, right? I want to let you know, man, that we're looking to work with some people. If you're in the North Dallas area, I want to invite you to come and apply, right? We have some open seats available. We're going to be filling the room up. If you're interested in learning how to trade futures, I want to invite you to come. I'm going to talk about what banks are doing and institutions, and it is absolutely powerful once you start to get this epiphany. So if you can, go to kdtinstitute.com/apply and just follow the script. It takes about 5 minutes to fill out the application. We just want to see where you're at in your trading journey. And then from that, we really want to help people understand how institutions are looking at the market. And we don't want to be chasing the market. Does that make sense? We want to allow the market to come to us versus just chasing. So let me get back. So as we look at it, right, I have this sell limit in place. Do you see where it says 2% of ATR? So I've got 2 ways that I can do my stop losses. I have this way, which is I can do 2% of the ATR, and my stop loss could be at $2.75 from the entry. Or I could do 10%, which to me makes sense because of how it moves, where my 10% of ATR is $13.25. So watch this. I'm going to take a ruler right here, and I'm going to go up $13.25. Ooh, it's hard to do this with your finger on the mouse. Perfect. Watch this. So I'm going to adjust that just a little bit. And if you know my number, it's down a little bit now. So watch what I just did right now. I've got the proper stop loss in place based on the movement of the market where I've positioned myself to not take a big loss. Everybody wants to talk about having big wins, right? And I get it, man. It's cool to make some money, but what keeps you in this game is the ability to minimize your risk. And so look at the epiphany, right? Can I give you an epiphany? This is what we're shooting for. We want to find trades that have low risk. Write this down, please. Low risk. We're not giving up the whole accounts. We're not just believing in the stars, the moons, the mountains. No, we want to find something that has lower risk. Number 2, we want to find trades that have high reward. What is a high reward? If I'm going to be risking X, then I need to be able to get Y at a minimum. And my suggestion would be is a 2-to-1. Now, if you look at this, we're risking 675 with the chance to make 28.62. Can I talk to you right quick? Do you think that makes sense? Because why would I risk 28.62 to make 28.62. That doesn't make any sense. Now, look at what's going on right now, folks. We see that the buyers are coming in. We could get an impulse. So hopefully on this live, we can see it. It's at 65.77 right now. And we want to see, can it make it to 65.89.25? That's what we're hoping for. But the beauty of this is we've already set up our trade. Isn't that awesome? We don't have to stare at the screen. We allow it to play out. Now, what is this called? I know we've got some traders. We got some people that reach out. Look at what's going on, folks. It's impulsing. Look at it. Who sees it? Come on, zoom in. Check this out. You see how the buyers are coming in? And it's very attracted to that area. Like I said, it's almost like a magnet, right? So we're waiting on this to happen. What I'm doing is a sell limit. I want price to go higher so that I can sell it down and make a premium. Does that make some sense? I'm selling at a high point. Now, I want you to think about this, right? So one or two things, and this is the hard part, but if you can master this, this is when it starts to change for you. Are you tracking with me? It changes when you've taken the emotion out and you're doing rule-based trading. So let me just type this down. Some of you have seen this before. We've got some brand new people. And business owners, I want to talk to you on this one. Trust me, I know what it is to run a business, man, and you can put so much time in. I cannot tell you how good it feels that you can position yourself where you don't have to be tied down to your business all day long. We've got people that started business and the business now owns them. You guys, look at this. Let's zoom in. Let's zoom in. You guys see it? We want to see, is this candle going to go up a little bit more? We're waiting to get activated in our trading. Now, who trades like this? Institutions. Institutions have institutional limit orders where they'll only play ball at specific price points. So we're close right now. Hopefully, we can, fold our fingers and see if we get activated in this trade. But we've already predetermined our stop. Boom, 675. We've already predetermined our entry, 65.89.75, and we've already predetermined our take profit. That is called setting up a trade. Now, here's the hard part. Being able to watch paint dry. Look at it. We might get activated, and when it does, right, we will see that this is either going to be in the positive or the negative. But we know worst case scenario, I am risking 675. Look how close, folks. We're starting to have some fun. Hopefully you took your popcorn out. Look at this, folks. It's right at the line. We just got activated. You guys see it. Look how the numbers are moving. I wanted to show what it looks like in a real trade. And here's what's going to happen. We're going to have a fluctuation. We're going to either have a fluctuation where this bad boy shoots through the zone and we lost quickly, or we start to see sellers coming in the market. Everybody see it. We're live right now. And what I like about live training is, anybody can put out a course and say, I do this and that. But how do we work through the mindset in this? How do we tell ourselves, listen, I want to be able to trade. How do I work through it? So look at what's going on, folks. It looks like it's blazing through this. We're very close. Look at that. That candle shot up. We don't know. We're down 400. And here's the hard part, right? If you're wrong, it's okay. If you're wrong, it's okay. So I don't know if we got a glitch in the system because we should have been out right here, but it's still going up. So I guess Murphy kicked in. But does everybody see what just happened right out here, right? We took this trade. It broke through the zone. So watch this. Regardless, this number is incorrect. We should be out. So we just have a Murphy thing going on. So what do you do with that, coach? Does trading not work? Of course it works. You follow your system. So guess what? I'm going to put this in red, and this is going to tell us straight up. It violated the zone. We're on to the next trade. You know what I like about this? This is what it really looks like. So now let's take a key on it, right? Let's zoom in a little bit. We're on the 5 minute. I mean, it blazed through that zone. Do you guys see it? Like we had our stop loss here, but just imagine if you decided to just allow hope to come in, right? Because you don't like to lose. And so you've told yourself, I'm good. I'm just going to hold on it. Guess what, folks? Remember I said every 30 points is 1,500. You would have been down 1,500. Look how this thing is spiking. You would have been down almost $2,000 if you didn't have a system in place. People lose because they don't have systems in place. So let's just imagine that 15 minutes has went by. And that's just kind of my rule of thumb for all traders, right? You've taken the trade, it didn't pan out. The X right here marks the spot, and look, it violated the zone. We see the buyers have came in. One of the things that we're not going to do is chase this candle. Now, let me show you something. We have an opposing zone right out here. I don't know if you guys can see it. And potentially, we can trade off these two zones. Now, because it broke through that zone, we're going to do something called a confirmation entry. And guys, I want you to see this. Look at how it broke through that zone. And all of a sudden now, you see that the sellers are coming in the market. Please tell me you see this. Put a 7 if you're tracking with me, because I like this to be the real deal on this one. And who can see that the sellers have came into the market? Now, what we just witnessed was something called a liquidity grab. Well, what do you mean? It broke through the zone. It made it look like it was going up forever. Guess what? It took it to the 66.50 area. You guys, I'm sorry, 65.44, 66.44. And then all of a sudden it dropped all the way down to 66.11. Do we see how these market makers would do this day in and day out? So what do? Number one, we're looking at the 1 minute time frame. I'm going to suggest, unless if you don't know what you're doing, don't trade a 1 minute. Let's zoom out to the 30 minute and look at what's happening, folks. We are seeing that the sellers are coming back in this area. Now, this could be called a confirmation entry. Let's check it out. We're going to do one again. If we're wrong, we'll lose quickly. You guys ready? So seeing that it's selling off, I want to get some confirmation, and I want to see, is it starting to return to that zone, right? That's what I'm looking at. Now, notice we've got a little pullback, so we're not going to get in yet. We want to see here, and I'm going to put it in yellow. Was this a minor pullback to get a greater position? It is in a green area. Or are the sellers going to push it down? So what can you do with this information? Let's make sense of it. What you can do is use some different tools. And one of the tools could be is you look at the volume profile. And on the volume profile, let me see if I can just add it in here right quick. There we go. You can ask yourself, where's the volume on this chart? Now watch this. We can look to the right over here, and we can see that we've kind of went out of buying volume and the sellers are coming in. So watch this. Let's say if we wanted to scalp this trade, our stop loss would need to be here, and we would need to see, can we lock up a position? You guys ready? So look at it. We just got into trade. We're up 100. Our stop loss, again, is the red line. So we're doing a manual stop, and we want to see how much could this drop. Look at it, folks. 250. It's going to fluctuate. So I like using this tool because this shows me where the volume is at in the market. Now watch this. 70% of the price action is happening right here. So in essence, if I'm going to be trading this, and I'm on the 1 minute right now, I'm on the 1 minute, I'm going to target an area where they have the most amount of value. So let's kind of think about what happened, right? We had the first trade, we lost to 650. Now we still had a good trade, but we got activated at the wrong time. And that will happen in the markets. But now look at it though, right? We're up, what is that, 500. We want to see, can we get a little bit more movement in the market, right? Let me see if I can move this with my finger. We're using the volume profile on our right over here just to serve as a gauge if it's making some sense. We're not going to chase the market. We are seeing these fair value gaps right below us. So this could be a place of retracement. So here's going to be my rule on this one. Why not lock in some of the funds? Because anything can happen in the market. Now, remember from a scalper's perspective, because this is not going to be the cup of tea for everybody. A scalper is literally wanting to jump in and jump out, grab some points, get in, get out. Does that make sense? Let me show you this area. And because we're doing the demo, very good for explaining trading. Watch this. Do you see this area in green? Oftentimes, whenever they have two on top of one another, price will kind of play around. So we could see a spike down, that could happen, or we can see a retracement from this area and it goes back to the upside. What you're going to have to decide if you're going to be doing this, you have to decide how much money would I be able to lock in on the trade? How can I get in and get out? Does that make sense? So that's the one play that we want to see on this one. Okay. Now, as we're looking at it as well, here's the thing that's the non-negotiable every single time. And I like to kind of just have this paradigm shift. Anything can happen in the markets at any given time. So you literally have to check your ego at the front door. You have to tell yourself, listen, I would love to make X number of dollars, but anything is going to happen. So I've got to keep my seatbelt on. My seatbelt here is going to be the red line. If it breaks above here, that's telling me that we should get out the trade. And so look at the fluctuation in the numbers, right? And I always tell this to people, right? We've seen it go as high as 400. It's going back and forth. You can have a profitable trade, but it means nothing if you don't lock in the funds. And so now look at it, right? We still got our red line here. Can it still spike up in this area? The answer is absolutely yes. People lose at these places because they don't know where they want to be in the markets. So let's go and let it play out, right? I think it's always good just to see what can happen. We're going to put on something called the VWAP. And the VWAP stands for volume weighted average price, right? It's going to let me know what's the going rate for this, and are the institutions trying to use this to either take it to a higher level, or do they want to return it to the median? And so let's go ahead and pull this up. We can go here. I've got all of this stuff saved, and we're going to see some lines on the chart. Track with me. The VWAP is the blue line. At the top, we have two things going on. We've got a standard deviation to the upside, a standard deviation to the downside. In essence, the VWAP shows us what's the average price that's going for this particular equity. It is 65.62. So the question we're going to ask ourselves is, how far does it want to get away from the VWAP? And if it wants to get away far, do we try to trade way above it? Because eventually we're going to see this come down and have some type of correction. Does that make sense? It'll stop at this line first. It'll go here second. It'll go here third. So we're kind of in the middle on this one. Does that make sense? So let me pivot a little bit. We've been looking at the S&P. I want to check out something else. So watch this. We have the S&P 500. We can look at NASDAQ. A lot of times you'll see that the NASDAQ moves close to the S&P 500. And look at this as well. The NASDAQ is coming into an area of selling. And as we look at this, we're going to see that the volume is running a little bit low over here. So if you look to the right, I've got, let me see if this is actually showing up on the recording. We've got NASDAQ, we've got gold, we've got the euro, we've got the ES, and we've got crude oil. Let me pivot a little bit as well. Crude oil is sitting at 107 a barrel. My question is, what does that mean on a micro level to us? I'll simplify it to you. Gas is going to be getting higher. So these are all the things that we look at. The reason I love trading futures is futures really showcases what's moving the world. You can see it from an equity standpoint, to an interest rate standpoint, to silver, gold, oil, gas. I mean, the stuff that affects us on a day-to-day basis. I want to go ahead and pivot right quickly just for the sake of time. If you've gotten some value today, and if you really want to learn, I want you to kind of comment the word structure. And I want to teach you a framework that you can apply a system, and this system can be dependable, where you're not just guessing. You're not going to win 100% of the time. So I'm sorry, I'm not going to give you a wooden nickel. But you're going to learn how to lose appropriately, but you're also going to know how to win and keep on utilizing that system time and time again. So what's the next step? I want you to go and apply for your seat at kdtinstitute.com/apply, free to apply. We're going to be working with 20 people this month. And in this, we're going to understand where banks are moving, where institutions are moving. And then we're going to say, how do I apply that to the futures market? Now, what's beautiful with this skill set is that you also can apply this to stocks, futures, Forex, options, cryptocurrency. It's absolutely amazing. Folks, so do me a favor, be blessed on purpose. Thank you for watching today. God bless you guys. Cheers.